The US-Israel attack on Iran has started escalating into a regional conflict, and markets across the globe have reacted in a negative manner. In fact, Nifty and Sensex, the benchmark indices on the Indian D Street, also plunged today. Joining us today is Mr. Deven Choksi, a market veteran. Mr. Choksi, thank you very much for joining us on Republic TV, sir.
Thank you so much.
So the markets just had a choppy session today. Nifty and Sensex are down, but we still saw some sort of recovery towards the end. I just want your first thoughts on this entire session, sir, today.
So yes, I think the market on one side is driven by the sentiment, and sentiments are governed by the situation in which I think the global economy, local economy, or for that matter, market expectations are belied upon. So I think the obvious it is that the current sentiments are extremely negative, largely because of the fact I think in the West Asia, whatever the trouble that we are seeing right now. So market had to react, market has reacted, obviously. Now coming to the other aspect of the market, the other aspect of the market is corporate sector, the earnings therein. And fortunately, corporate sectors and the earnings, they are not so badly impacted as the market is perceiving it to be. Yes, I agree that in some of the cases, some part of the business might get affected. If you are a company called Larson, probably I think your business might get affected largely because of the disruptions happening in those areas. If you are a supplier in West Asia for any of your product and services, I think you might get affected to a certain extent. But that does not take away the larger part of the growth story of Indian companies, and that is what I think my underlying point that I would like to score is. Maybe this disruption, whatever time it takes, we do not know. But I think one has to be very careful about making an assumption that these are not going to close down any of the businesses for that matter. So let's not bring the negative sentiments as much, and I think probably which start affecting our portfolio. And the third element of the market is the investor. Investors are local as well as investors are global. Now, the global investors may have a different perspective because I think they may want to secure their assets from currency fluctuations, which may eventually happen. So they may probably pull out money in quick succession, largely because of that. Local investors may not have that compulsion because I think they are trading in rupee and they will continue to remain in rupee. So for them, they have to only safeguard the downside in their portfolio, whereas the foreign investors have to also safeguard the currency fluctuation in their portfolio.
Right.
So all these aspects, 1, 2, 3, the geopolitical situation and the sentiment, the corporate earning and the reality check, and the investors, I think who are local, global, I think the compulsion under which they have to adjust their portfolio, sell their portfolio, they all play a cumulative role. And that's where I guess I think the market impact is today being seen. The past has also told us that whenever there is a war-like situation, whenever it has happened in past, initial reaction is always negative, and thereafter the market has a tendency to recover and recover also very smartly and sharply. Over a period of time, I think it adjusts on its own. I think the kind of volatility in the system gets adjusted. So I would like to believe that if Iran and Israel America's problem, if not completely resolved in next few days, but at least if it starts taking some amount of corrective measure in not escalating it further, quite possible that the market will start stabilizing, and that is one possibility that one can put before your investors.
Right. How do you interpret, before I come to the larger questions that you referred to, how do you interpret the last few half an hour or 1 hour recovery in the market, sir, in today's session?
So, yes, you are absolutely right. I guess I think the investor or the trader, they would not like to carry the overnight position of whatever it is. Because in an extremely fluid situation in which we are globally, tomorrow for some reason if a positive news comes up, then those positions may be hard to correct or square up. So they will not like to carry the positions beyond a point. Plus tomorrow we have a national holiday in the country. Markets are going to be shut. So nobody would like to keep their position open for 48 hours, especially the traders. So they obviously would like to, I think, square up their position. And that's what probably I was expecting at the beginning of the day also, that even if the market falls in the beginning, market will have to recover somewhere before the end of the day. And I guess partly it has played out that way.
Okay. You mentioned that the markets have a tendency to recover in a smart manner. Should we expect a V-shaped recovery going from here or wherever the bottom is? And what would be the timeline that you would look at, or what would be the trigger that you would look at, sir?
So for a V shape to happen, definitely I think the situation has to get completely under control. Something similar to what happened during Operation Sindoor, wherein in 7 days' time, I think the entire activity came into control and the market, I think, had a decent amount of recovery thereafter. The similar situation can happen here as well. Suppose if tomorrow it is declared that both nations or all three nations put together have agreed to ceasefire, quite possible that I think whatever the V-shaped recovery that you are asking for is quite possible. That is definitely doable. And that's what I think the sentiments will dictate. So honestly, today you and me can only expect the situation to get normalized, and probably I can spell out more about the possibilities in otherwise. I don't think that it makes more sense to trader or investor. I think we have to stay focused on individual businesses, the companies, and I think the opportunities that you get in this environment.
Right.
I believe that I think this kind of corrections or the fall in the market, they also bring a God-sent opportunity in some of the stocks. I think where the valuation were, suppose if they were yesterday expensive, today if they've started becoming corrective and I think the expensive part of the growth has gone, quite possible that the situation has helped you in buying the stocks in your portfolio.
Right.
For sure, we all believe one thing that I think whenever this kind of fall has happened, in a subsequent period of time, selectively though it may be, markets have recovered. And this time I think it's not going to be very different. It will recover. We do not know the time. That's the beauty part of it right now.
So what would your advice to investors be right now? Just start buying, wait for bottom, start buying selectively. What would you ask investors to do right now?
So, 1, 2, 3 points, answer would be that don't panic. Absolutely must, because there is no need to panic. Second answer would be that selectively, whatever you can buy in a good quality. Suppose if you don't want to take an exposure into mid and small companies, we are more vulnerable. Then top rank Nifty 50 stocks. I think some of the selectively large companies you can start buying gradually into your portfolio. That is the best approach because I think when the market recovers, I think that is upside. I think would be first in some of the large companies as I see it. And the third point, which I would like to always add, is that during the volatile times, avoid trading because trading acts like a knife which cuts on both sides. So frankly, I think it's not required to do trading at this point of time. Don't be over ambitious in doing the trading in the market. Stay low, protect the capital, and work a little bit more rationally in this kind of a period till the situation becomes little normal. There is no end to the greed that you may have, I think, in form of trading. But the fact is that today is the time to preserve the capital and not, I think, become extraordinarily adventurous in doing the trading or taking the trading position.
So I mean, just to seek some clarity on this, should investors really be, starting to deploy their capital or wait for a further bottom or, to happen? How should one look at it?
Selectively start deploying the capital in select stocks. I think because they are available today at a corrected valuation and selectively they can be invested into the portfolio because when the better times happen for them tomorrow, they may be 15-20% higher only compared to what they are quoting today.
Sir, the Indian market was in fact the worst performing market over the year gone by. You've said fundamentally everything looks absolutely fine. Valuations are stretched and then maybe today is the opportunity probably or this conflict is likely to be that opportunity where corrections may happen and valuations could again look attractive. I want to ask you, we had the tariffs which was one of the tantrums. The second was of course the Ukraine and Russia war. We had the current geopolitical conflict that is happening. Do you think all of these, the geopolitical negative, events that were probably negatively affecting the sentiment are all over? Do you think it's the end of the turmoil and probably after this the market could look at a potential upside or a bull run?
So let me answer this question in two parts. The first part, I would like to say that assume that India was a capital account convertible country, I think this situation would not have happened. That on one side dollar is falling, on other side rupee is falling. Generally, when dollar fell, rupee should have appreciated. It has not happened in this case. And falling rupee is largely due to the foreign portfolio investors pulling out money from the market. So they actually added fuel to the fire. And that's where probably I think the market came down because I think the currency started moving down. We have seen, I think, a worst performing currency in the entire Asia Pac in last in till date today. And that's where probably I think we should be saying that I think convertibility could have possibly saved the situation. That is the first point.
Right.
The second aspect about I think the fall in the market, despite of good fundamentals, is largely because of the extremely high amount of derivative trading that we have seen. In fact, I think our derivative market volume, even option traded volume, is some percentage of our GDP.
True.
I think probably it's an insane amount which we are trading today. And as a result of which, I think the investment cult, which should have otherwise, I think, protected this market from this kind of a fall, is not coming to the rescue. In my viewpoint, I think the government is cognizant of this particular fact and they're trying to arrest, I think, the excessive speculation in the market, both the regulator as well as the government, which we have seen in the budget as well as regulatory measures that they've taken post-budget. So in my viewpoint, I think this is another reason for which our markets are remaining extremely volatile, and that's where most of the global traders are moving out of the market. They do not want to see the currency related impact into their portfolio. They do not want to see I think, the government related or rather excessive speculation related measures that are being taken due to the excessive trading. Those issues they do not want to see, and that's where I guess I think the market, despite of strong fundamentals economically as well as corporate earnings, the markets have given up, markets have fallen.
So what are those two or three things that you would want to say that, these are three aspects or these are three things that if they happen, the FIIs will again start coming back to India?
See, in my viewpoint, fundamentals, absolutely, I think everybody squarely agrees that India is probably the best fundamentally driven economy today. In fact, your interest rate is down, your inflation is down, overall your industrial output is higher, and your GDP growth rate is higher. So all these checkbox items, I think, which you have, they are all confirming that India is progressing very well on the global front, and investors would like to return back to us.
Okay.
The current problem, which I have explained in form of the currency, we have to demonstrate the will to create the currency resolution, which currently is affecting us. China did that part of it with mainland China and Hong Kong, wherein they brought in the Stock Connect program, wherein mainland China would be fed by the currency dollar through Hong Kong and in a limited quantity, limited manner. But I think it gave the flexibility to global investors to trade China on a convertible basis, if not 100%, at some percentage. India is definitely required to bring this particular program. We already have IFSC in form of Gift City. Through a Gift City, you bring money through dollar, attract money through dollar, and you deploy that money in India in a domestic economy with the dollar as a currency level itself, without asking the investor or the trader to convert that currency from dollar to rupee. If he starts saving the savings of 3-4%, it will automatically inspire confidence in him, and as a result of which he will not be forcing himself to withdraw money in a situation which we are discussing currently today. So that could be one of the biggest, I think, positive that one can probably ask for. And if the government and the country takes, I think, certain policy related decisions and bring this kind of a limited capital account convertibility, in my viewpoint, I think this could be a good situation to fill for. Along with good corporate earnings, I think you would have the relatively stable currency performance. And that's where probably government will be better off, RBI will be better off. It's my viewpoint.
Okay. Sir, coming back to one of the most important aspects of the ongoing conflict, and that is blocking of the Strait of Hormuz. India's dependence on oil is very well known. What are the likely implications of this on corporate earnings, on margins, and which sectors are likely to be affected?
So again, break up this scenario into two parts, a near-term scenario and a little long-term scenario. In the near term, in anticipation of this war breaking out, I think most of the corporates have stocked up their requirements of oil or oil derivatives. So to a greater extent, I think they are not affected beyond a point, at least in the near term. And near term, I refer to 1 or 2 months or 3 months in some of the cases. They are not affected because I think the oil stocks and oil derivative product stocks, I think, is already there with them. The current situation which could affect is Suez Canal. If it is getting impacted, then probably the transportation, the logistic part of the situation would probably come into the middle, and that could affect, I think, some amount of free flow of trade between the global countries, particularly the entire Middle East and the Europe corridor that we are talking about. It could get affected. And that is the real danger that we are seeing. We are not seeing the danger from the commodity. Commodity is well secured. The trade getting disrupted because of the logistic movement getting affected, that's a real danger that we are seeing. And that is where even in the near term, things could go out of control. That is what one is worried about.
Okay.
In my viewpoint, again, having said that, we believe that I think the situation in the little near to longer term is going to be a little bit more stable because no country of the world would permanently like to get disrupted. Europe may not want to permanently get like to disrupted because of the supply chain logistic is not working. Neither the UAE and other countries, I think, in surrounding areas in the Asia Pac should get affected. So they will also be trying to solve this particular problem sooner than later. In fact, UAE nations are appealing to Iran not to escalate, I think, this particular attack. So that is a positive thing which I am seeing. At least those nations, if they can influence Iran properly, they may probably do that. And one wish and a hope, maybe silver lining as you may want to call it as, see, Iran is observing 40 days mourning period. Generally, during the mourning period, I think they are not unlikely to escalate. I think, except protecting themselves, they are unlikely to escalate. And should that be the situation, in my viewpoint, I think the normalcy could return relatively faster compared to otherwise in a situation. So let's hope for the best. I think we all can predict and all can expect. I think we can only hope for the best hereafter and pray God that sanity prevails in the global environment.
Absolutely. So in fact, if it was a geopolitical question, I would have really asked if this is World War III. But to you, I would ask, as someone who's an authoritative voice on economics and markets, can the world or the countries that are currently involved really economically afford this war?
Truly, the wars are not fought with warfares, according to me. I think wars are fought only economically. I think today most of the nations are using warfare only for the purpose of, I think, giving the impact as far as the attack is concerned. But ultimately, the financials of the countries get destroyed, and that is what is, I think, more worrisome factor. Those countries which are fighting wars, their inflations are nowhere under control. Their production and outputs are nowhere under control. Their repayment abilities are nowhere under control. And those countries are actually the sufferer. Even if one wants to count America into this game, I think today they are about $38 trillion worth of national debt and $1 trillion worth of, I think, interest payment that they are making every single year. I think it does not make any sense to be part of a war for them. Economically, I think you are getting to have a devastated impact with your currency also going to come down eventually if it is not controlled. So yes, I guess I think this is something which one will have to be very, very painfully observing this part of it.
Okay.
We don't have the answers to everything, frankly speaking, if you ask me. But yes, I think we can see things little differently economically as well as from the point of view of investment area in the economy.
Right. Sir, one or two more questions, that's it. Is that India has kind of maneuvered diplomatically throughout these conflicts? I mean, be it Russia, Ukraine, or be it the Israel-Iran conflict. India is, in simple language, friends with both the countries. Do you think this whole non-alignment could make India an attractive destination that could probably be shock-proof, at least from the ongoing missile exchanges that we are seeing? Could India be shock-proof and thus, because of that, be an attractive investment destination?
Mature economy India is, and mature leadership this country has got, frankly speaking, that they are not changing the sides from one event to another event. They are keeping themselves neutral, and at the same time, I think they are keeping the relationships cordial with one and every other country of the world.
Right.
they are also sending the message. We are also sending the message to world that I think there is no need to fight. I think let us sit together and resolve the issues. Yes, I think everybody, including our Prime Minister, had to be vocal about the terrorism attack happening to the Israel. And everybody is against terrorism. That is one thing very clear. And for that, rest of the nations of the world will have to sit together to eradicate the terrorism from their systems. On that front, I think more amount of efforts are required, frankly. And India is taking a right position over there. Our Prime Minister is basically moving into every other nation and he's trying to basically address the situation of how to we eradicate the entire terrorism related activity which affects one and every other nation. So there's no need to take a position. On the contrary, I think as we call it as India is talking about inclusive world.
Right.
And we are promoting that message. So hopefully, I think it is listened well. Hopefully, I think things should come under some amount of control. Hopefully, I think we still see the resolution to these matters. The world cannot end up fighting forever.
Okay.
Somewhere, I think there has to be an end to this fight, which is on since last few years now.
But does this make India a better destination to invest? This safety net, so to say?
100%. I think we are taking unbiased approach. We are taking, I think, the collaborative approach. So India definitely attracts more amount of growth prospects at the same time. And in my viewpoint, I think global investors does understand this particular subject so well. So certainly, I think the politically and policy-wise, if one is to look at India, today we are probably seen as one of the most investor-friendly country from that perspective.
Right, sir. Last question is, on a 5-year horizon, with all the turmoil going on right now, with tariff tantrums as well as the ongoing wars, your long-term outlook on Indian market, Nifty and Sensex, is it unchanged? Is it altered? Is it bullish? It is bearish? What would it be?
Every fall in the market is only adding to the earning opportunity in our markets. So if you are taking 5 years view from now, obviously, I think variety of situations are going to come in the middle, but we believe that Indian economy will continue to grow, I think at the rate of around 10% plus rate of growth. Even though there are certain disruptions which are happening in select pockets for time to time, I think 10% kind of a GDP growth is definitely possible as far as the India economy is concerned.
Okay.
And given the kind of size that we are assuming, today we are the 4th largest economy of the world. Moment I think you enter into the 3rd largest economy space of the world, I think you are only going to attract more and more capital and not otherwise. So I am pretty certain about it that Indian corporates are likely to grow and grow much bigger. Some of the big companies are getting bigger. Some of the smaller companies are also becoming bigger. So in my viewpoint, I think 5 years, brilliant prospects going forward.
Okay.
Maybe current market capitalization of around 5 trillion. One would not be surprised if 5 trillion market cap could become somewhere around close to around 10 trillion market cap going forward in 5 years.
Wonderful. Which sectors would you bet big on?
According to me, more than a sector, I think you have to look at individual companies, how they are positioning in respective sectors.
Okay.
Suppose in oil and gas sector, where it is impacted largely because of the global turmoil at this point of time, if a company like Reliance, for example, is working in a direction of adding a significantly large amount of portfolio of renewable energy, I think that company could be relatively far better off compared to rest of the companies which are not building similar size of portfolio of renewable energy.
Right.
Similarly, those companies which are consumer-focused companies, which are driving the consumer demand through the use of technology, they could be relatively better off compared to otherwise those companies which are commoditizing the consumer activities in their businesses. So I would think that we'll have to look at the entire subject very, very objectively.
Okay.
That who is basically remaining most viable proposition in the global universe, I think, and who is basically sustaining the challenges would be the better choice of a company for investment, not necessarily the sector.
Wonderful. Mr. Choksi, thank you very much for joining us. As always, talking to you is always very, very, it's an insightful discussion always with you. Thank you very much for joining us on Republic TV.
Thank you so much. Thank you.